Well, the title says it all. Intel is laying off 20% of its employees. The consumer PC business has definitely hit a rough patch. Sales of high-end semiconductor chips have weakened. Demand is way down. 2022 has also basically been a bad year for chip companies. That is especially true of the companies that sell the most powerful chips. PC sales are the weakest that they have been in a few years now. And that has Wall Street analysts pretty unhappy. The pandemic fueled a boom in laptop sales to enable people to work from home. But now, we are in the post-pandemic hangover. So what does this mean for PC companies? What does it mean for big tech companies? What does it mean for the economy? And what does it mean for the future of the United States? But before we get into all of that, please press the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. These are tough times in the PC patch and for semiconductor companies in general. Now, news has surfaced that chip giant Intel is planning layoffs. Word on the street is that the layoffs will likely number in the thousands, probably 20% of the workforce. The layoff is basically in response to declining demand for the Intel's consumer chips. The PC market is a downturn as the economy works through the post-pandemic hangover. The layoffs come even as Intel is ready to get billions in funding from the 2022 CHIPS Act. The CHIPS Act is a package of U.S. government spending designed to boost chip manufacturing in the United States. Intel's sales and marketing teams will be hit particularly hard by the layoffs. According to sources, headcount reductions will affect about 20% of Intel employees. Reportedly, the job cuts will be officially announced later in October. Intel is set to report Q3 earnings on October 27th. Intel currently has 113,700 employees. The PC market is now struggling after basically 2 years on steroids driven by pandemic-fueled work-from-home demand. Global PC shipments 68 million units in Q3, which is 19.5% less than Q3 of 2021. That is the largest PC market decline since market tracking began in the mid-1990s. This quarter's results could mark a historic slowdown for the PC market, said Gartner director analyst Mikako Kitagawa in a press statement. Back-to-school sales ended with disappointing results despite massive promotions and price drops, Kitagawa continued. This is because of a lack of need as many consumers had purchased new PCs in the last 2 years, Kitagawa added. On the business side, geopolitical and economic uncertainties led to more selective IT spending, and PCs were not at the top of the priority list, Kitagawa also noted. Intel discussed these difficulties in its Q2 earnings conference call in July. The company noted that its consumer semiconductor chip sales had declined by 25%. Overall company revenue declined by a whopping 22% year over year. Because of that, Intel actually lost $500 million. Intel reported a 109% reduction in profit in Q2. That compares with the $5.1 billion it made in Q2 2021. During the Q2 earnings call, Intel CEO Pat Gelsinger basically telegraphed the layoffs. He noted that Intel would be lowering core expenses in calendar year 2022, and that the company would look to take additional actions in the second half of the year. Q3 shipments in the global PC market basically fell off a cliff at -15% year over year. New PC market information was recently reported by market research firm International Data Corporation, also known as IDC, in a published report. Total PC shipments for Q3 was 74.3 million units. That is 87.3 million units less than Q3 of 2021. And as we all know, inflation continues to rage in most of the world. Central banks are aggressively raising interest rates. Layoffs are sweeping the United States. So, consumers are pulling back on spending, especially discretionary spending. The big players like Lenovo, HP, and Dell all saw double-digit decreases in Q3 shipments. The PC market is in retreat and the average selling prices for PCs have fallen over the last 2 quarters after reaching a historic high at $910 in this year's Q1, said IDC. The personal computing market saw shipments continue to cool in the third quarter, the IDC report continued. Industry-wide, PC shipments were down 15% in Q3 versus a year earlier. Believe it or not, that is still well above pre-pandemic levels. Global shipments totaled 74.3 million in the quarter, according to the report. That is down from 87.3 million during the same period last year, the report continued. HP experienced a 28% decline in PC shipments. Dell PC shipments were down 21%. And Lenovo down 16%. Chipmaker AMD tipped off this news last week. AMD slashed its sales forecast last week. Not surprisingly, they blamed the usual suspects. Unexpected decline in the PC demand. Supply chain issues. And, our old favorite, the macroeconomic environment. Consumer economic concerns were also woven into the list of excuses. Discretionary spending is weakening as economic conditions deteriorate. To some extent, demand may be awaiting powerful new chips. In the gaming segment, consumers are waiting for the new AMD Ryzen 7000 and the new Radeon graphics cards. Wall Street analysts will be sensitized to signs of weakness in PC shipments. Microsoft and Intel have their Q3 earnings calls set for later in October. Microsoft on October 25th and Intel on October 27th. Based on what AMD has already said, Wall Street is not happy. AMD reported Q3 revenue of $5.6 billion. Wall Street analysts were expecting $6.7 billion. AMD client PC business saw a whopping 53% fall in revenue from Q2 of 2022. Intel and Nvidia were basically singing from the same song sheet in their last couple of earnings calls. Although weakness in the PC patch hurts, it is not really as bad as it seems to be. Remember, all of this is in comparison to a work-from-home fueled sales boom. 2022 has been painful for semiconductor chip companies. AMD, Nvidia, and Intel. These are the three main players' high-end semiconductor chip market. Their valuations are a recession in themselves. Needless to say, it has been a disaster for the shareholders of the group. Intel has seen its market value melt from over $206 billion in January to $105 billion. Companies are earning less money on its products as profits have been squeezed. Earnings before interest, tax, expenses is expected to be about 50%. The group as a whole was hoping for 54%. The PC market weakened significantly in the quarter, said AMD Chair and CEO Dr. Lisa Su. Macroeconomic conditions drove lower than expected PC demand, Su noted. And a significant inventory correction across the PC supply chain, Su added. Semiconductor manufacturers are impacted in much the same way as the rest of the technology sector. Fears of recession are gripping consumers and businesses. So everyone is cutting back on spending. All of this comes as the United States teeters on the brink of recession. But, what do you think? Please leave us a comment below and hit the like button. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. Thank you for watching.